Hello and welcome to our daily market review and analysis session. I should have carried out on Friday where I had some technical problems, so I do apologize for that. But it's Sunday afternoon here in London. It's wet and cold, so I thought I better now attend to the duties I failed to carry out on a Friday. So anyway, hope you're all having a wonderful weekend and certainly getting ready for the next week, and I hope that by going through some of the market overview and then specifically the US dollar pairs, we might be able to have some insight into what likely market action we will expect early on in the week and during the week. So as usual, I will continue with our first chart, which is the Dow Jones Industrial 30, and rather than go into great detail of the background, we are still in an uptrend. But just have a quick look that since the 2009 we've been broadly speaking in this rising trend channel, and this bold one is simply connecting the very low at 2009, and then this one, the intermediate low, higher low we had in 2011. So far, if you use those, they're actually defining the general price action of the index since the bottom of 2009. So for example, here what I'm doing is simply putting these like a little track, like a railway track, to identify where the prices have been. So the bold ones are the two outside ones, and they're simply, as I say, using the same line that I used for drawing the bottom one here, bold one, and then copy pasting those lines and putting it on the top. So that one is identifying the upper extremity. Unlikely that we will reach that in the intermediate time, but certainly most of the time the price recently has been gravitating between this lighter color line here and then the lighter color line at the bottom. So we are in higher high, and in terms of the RSI, this is a weekly chart, remember, so it's relatively a big picture kind of a view. So big picture view. So if you look at it, we made a high here which corresponds with a high in RSI, and then subsequently we've been going high, but on the RSI we've not really done that. However, if you draw this line here on the RSI, you can see that the downtrend line, whatever that represented, has actually been broken to the upside. That means there is a new cycle going up there, which would eventually lead the prices higher. So what I'm now expecting is that we've had whatever cycle that started from here, so I put in the W, X and Y, so I think that is one possible complete cycle of a double zigzag. And then since then we had a wave X, and I feel that we will be doing another wave A, or like here, W, X and Y. So we've got W, we've got X here, and we've started up another possibly double or a triple zigzag in the process. Like over here we had a triple zigzag, W, X, Y, X, Z, triple zigzag. And on this one we didn't have a triple zigzag. On this one we had 1, 2, well, 1, 3, A, B and C sort of a thing, or 1, 2, 3, 4 and 5 to give us wave A, a small b and small c. So over here we have A, B and C to give us W, X, and we'll be doing W, X, Y, X, Z possibly with a triple zigzag. So that's why this one appeared to have gone through the downtrend line, which should have really correspond with the price. You can see over here where if I darken that color and make it thick brown, you see where recently price have gone through. So either that's a failed break or it's a genuine break, and we are very close to the 2007 high we had there. My feeling is that the RSI momentum seems to be indicating that there is some element of strength in the price index. So let me take these bits away now so it don't cluster up our chart. Okay, so now at the moment the price seems to be going sideways and RSI has climbed down. So what I think we will probably get now during the week is either we will be rolling over for a small correction, or price will just continue trading sideways until RSIs come down to 50, for example, and then the price and RSI both will go up and probably create a minor divergence from here. So if we did that, then we would have another higher high on the price but not the RSI. And in terms of the actual price, since the low we had recently, which is in November, then I think this first one is a wave 1, this is wave 2, and we are in the process of finalizing wave 3. 3 is not complete yet. In the wave 3 we've got 1, 2, possibly 3, currently consolidating 4, and maybe a small drive up to complete wave 3. Then we should get a retracement. So I expect that, you know, if we hold the current level, then I think we'll just trade sideways, or we might get a spike low and suddenly run straight back up. I'm not expecting, on this occasion, I'm not expecting a huge correction. It will only be like a couple of 100 points on the Dow Jones, and then at least another high, which will take us to the vicinity of 14,100 or 14,200, which is where the 2007 high was, 14,200. Once we reach that, then I think this wave 3 will be over. We'll probably have a bit more deeper correction, and then we will go back up to take out the 2007 high, and that would complete the 5-wave action to the upside. And until then, I think the equity market generally supportive, although they're expecting a minor correction, and the correction, as you know, happens in two forms. It can either actually travel to the downside to provide a small retracement, or it can just continue to trade sideways and then suddenly break up. So it could be either. So anyway, what I'm saying, broadly speaking, is that market is not, during the week, market is not going to make a huge move to the upside from the current level, neither is it going to make a huge move to the downside from the current level. The bias currently is still to the upside, even if it sort of comes down 100, 150 or 200 points, the bias is still to the upside, and I do expect probably by the end of the week we will probably be, you know, touching 14,000. Well, we've actually scored a 14,000 recently, but the high of 2007, which was at 14,200. So we may actually get that this week, at least probably toward the latter part of the week, if not earlier. Fridays and Mondays often mark high and low of the week. So I suspect that if, for example, on Monday we continue to sort of stagnate sideways, then it's possible on a Friday we could actually finish up scoring high and then making a retracement the following week. So that's what I'm currently looking at for the Dow Jones. Still supportive of the upward bias, but in the process we are currently consolidating, and possible part of that consolidation could be maybe a small quick visit to 13,800 or so, 13,800, maybe 13,900, sorry, 13,800 to 13,700, and then push higher. So that's the general outlook for the equity. The other thing is that if I was to put Fibonacci projections, then currently I am suspecting, see, if we look at this wave here, this first leg, and I applied from this leg here, and if this is the 5-wave move up, then often the wave 3 reaches 161.8 extension. So 161.8 extension comes in here, which is 14,300. So that's where wave 3 could actually finish up. And if it pulls back and makes a wave 5, then we could well be looking at 14,004, 14,005 before any significant retracement will be due. So I think looking into next couple of weeks, allowing usual retracement, the bias will remain to the upside. So let's now look at oil prices. After having had this nice clean 5-wave up, we are in a process of retracing as we're expecting, and if you drop down to smaller time frame, it looks like we probably got from the high here, this A, probably retracement B, and we are in the process of doing a wave C. So in this wave A, we got small a, small b, small c to give us wave A. We've gone back ABC to the upside. We'll be making another leg down. So whilst the oil is doing that, equity market looks like it's just trading sideways. So once the oil gets to somewhere in the region of 93, oil will be a buy. That means the equity market will start making up its last leg of the current cycle. What I mean is this cycle here, from the low we had in 30th of December. So from 30th of December we've had a low, so we've got a gap up 1, 2, this is 3, small retracement 4, and then 5. I think when that 5 is done, we will be looking for a slightly larger retracement. So during that time, I think what we're going to see is oil will probably retrace to the downside, form a low, and will run with the equity index. And also it may well be that over here we've had some complex kind of ABC, and I've never really been able to identify what it is, and what it might be now looking back behind is that in essence, if I put a vertical line, this low here, which is on 7th of November, we might actually have this where I put wave A, that could be actually wave 1, and then you put ABC down as a wave 2, this may be 3, current retracement wave 4, and then final leg of 5. Now that would then synchronize with the wave count we're putting on the Dow Jones Industrial. But nevertheless, the oil is currently coming down and equity index is holding steady. So when both finishes, they will make a next leg up. Now if what I've just said is correct, then this here is wave 1, this is 2, if this is 3, then currently in a 4, and we may come back for wave 5, which will probably hit to somewhere about 100, and that's when the wave 3 in the equity index will complete, and then both will retrace a little bit larger and then make a new final high for a complete 5 wave sequence. So here it might look like something like this. So a small little congesting sideways, higher up to maybe 14,002, 14,003, then come back down, and then a final leg to 14,004, 14,005, which is from where we expect a reasonable retracement that could bring us all the way back to somewhere in the region of about 13,000 or so. So one thing at a time is that broadly speaking, sideways, neutral to upside bias. Oil upward bias, but allowing for the current decline to continue to probably about 93. Okay, so we were going to look at the dollar index. Now in the dollar index, there are just two things I need to point out. You are very familiar now with what I've been expecting since the high we had here in July. Whatever you call this one, it doesn't matter which particular waves we are counting them, but we've had a fairly sharp sell-off, and against that is evident that this is not a new move up, rather it is a correction. That's why it's been stagnant and it's been overlapping and it's not getting anywhere. So this sharp move is been corrected by this move. Now this correction could be over if I have what I think is contracting triangle. So contracting triangle comes in a wave B or a wave 4. So either we have a wave B here or we have a wave 4. If this is a wave 4, then we've got 1, 2, 3, 4, and we'll have another leg down 5. And in fact, that would be more a cautious view for the time being, because leg 5 doesn't have to be huge. You can simply come and retest the low here or make another minor lower low. So what I mean is, this wave 5 starting from here could come there. It can make a new lower low as well, but it doesn't have to. It can simply come back and retest this low. So we've got 1, 2, 3, 4, and 5 leg, and then we can have a slightly deeper retracement of the dollar index. So that green is one possibility if we have this as a part of wave 4. If it is part of wave B, then we've had wave A down, this is B, and then we can have a C. And C also doesn't have to be huge, but the C usually will be stronger. At least it will probably take us to like 77 or so. You know, it will probably at least break the triangle. If it breaks the triangle, then, you know, I think almost we've got an equal leg. Wave A equals to wave B. So in that case, we could be going down a lot lower. So I am still preferring the wave count in the numbers, but I could be completely proven wrong, and I may well have misinterpreted some of the things. However, what I'm not wrong on is the fact that this is a correction of this declining leg. Now, if we ignore all the wave counts, then what we could have is we could have sharp correction down, this contracting triangle, which when finishes could come back to retest the bottom. So from this triangular basis is we've got wave A, wave B, C, D and E, and in a wave E we could possibly come up to something like 78 and a half, 78.6, and that would be, sorry, rather 80.5, which is 78.6% retracement. So if we do this last leg down, then Fibonacci retracement, we've already done 61%. So we could have a small little pullback. If it's already done, it's done. But if not, small little pullback there. And then possibly another little leg higher, which will bring us to around 80.5 area, where this triangular would finish. Okay. So at the moment, just like the dollar index, I mean Dow Jones index, we're not expecting a huge move of the dollar index one way or the other. It is likely to congest a bit more in this triangle. And even if it wasn't actually congesting, what it might do is, for example, next week we could expect a small pullback in the dollar index, and then another little leg higher. So once the triangle is over, it could come down as a wave 1, small retracement wave 2, before real wave 3 begins as a part of this, either a C or a leg 5. Okay, so there is still a room for dollar index to spend a bit more time in this relatively tighter and narrower triangle. But, and of course, the triangle can fail. That's the other point I need you to remember. If the triangle fails, then what we have is we have ABC as a wave A, ABC down as a wave B, and we are and the wave B would be like a ABC up here, and then this A, this B and this C to finish here, and we are now coming back, in which case we've got a flat correction. Okay, now flat correction, as you know, is we have flat correction, we have, just looking at this one, is we could have A, B and C, which is what we got here so far. Then we might come down in A, B and C to the downside, which is up to here, and then we have 5 wave to the upside. Now that 5 wave is, let me actually draw it. For example, like that. Okay, so we could have a flat. It is quite entirely possible. Now, if we have a flat, then we are currently doing 5 wave up, and we could very well in that case have the triangle fail, and dollar index could climb to almost back to this previous high we had here, 81.50 area. That is possible, and in that case we would see clear 5 wave to the upside. At the moment there's no evidence of that, because this one clearly looks like a complete wave, and also this one looks quite strong. But then if you look at it on RSI, you see RSI is already beginning to curl up on 4-hour chart. So I think it's not so easy. What I think this is we've got long A, ABC back B, and because this was a 5 wave up, we might be doing a 5 wave over here. So we might have, for example, this one is a 5 wave A, 5 wave up, then we got wave B down here, and then this one is a wave, 3 waves, 1 2 3 4 and 5. So they would be like this. It would be 1 2 here, this one is 3, either complete or nearly complete, and in which case what we get is then from here we come down for 4, and then we get another leg higher, in which case we've actually got 5 wave, and in that case I think it may well turn out to be a 5 wave up. So if I did this one, this one has 2, 1 2 3 4 5, so that finishes sorry, 3 here, 4, and this one is 5. There may be a bit more left on the 5. You know, we could drop down to smaller time frame and see 1 2 3 4 and 5. So a little bit left on a 5, I think. So we might see this 5 a little bit higher up, then pull back. So then this one here higher up would become wave 3, and then we will get wave 4, and then we'll get wave 5. Now if that was to happen, that means dollar would strengthen quite a bit. If that was to happen, then our triangular part which we are talking about would fail. So at the moment I'm fully counting that in as a possibility, so I'm making this one very light color just to say that there is a line in there, but perhaps I'm not expecting it to hold, and that we would head higher, and then wave 5 could take us to possibly around 81, approximately, we round it up 81, or even retest this previous high. Then we would be in a complete new cycle down. So I'm looking for triangle, but I think the triangle is less likely to play out, and therefore if it fails, then we know why it's failed, because we are expecting this as a flat correction. So we had whatever wave that is, we had a flat correction, which still could be wave 4 or wave B, flat correction, and then we would start our next decline lower. So for the time being, what this wood is telling me is that we are currently in an uptrend, and that uptrend on the dollar is likely to hold for a little while. So if that's correct, then I think we may find that the oil actually retrace a bit more than what we're expecting, and maybe even the equity index, rather than just going sideways, it might actually come down. So if I just go back to that very quickly, what we are saying here is that in this sideway we might have like a wave wave A. Here we might have wave A, B and C to give us wave A retracement, and we might come down as wave C. So you've got wave A, currently B, and a leg down as a C. That would then fit in with the equity, the dollar index, possibly having a potential to go up. Okay, so if that triangle fails, that's what we're expecting. So that would then mean that there is some up and down steps, but broadly dollar increasing, and the currency pairs against the dollar, like the euro and pound and others, to some extent in varying degree would weaken against the dollar. So let's now go through the US dollar pairs and see how some of these things will fit in. And we're looking for US dollar pairs. Okay, what I'm also going to do is let me start off with the one that appears to be a bit more clearer. I'll go back to the market overview, and then over here I've had one where I thought I had one, probably not. Okay, what I'm going to do is I'm going to put it with the other currency pairs then. Okay, so here I'm going to draw another chart of Euro USD, sorry, US dollar yen, US, what's it called? That's very strange. Let me just new chart. Okay, so US dollar yen, and what I'm going to do is I'm going to overlay that with the now that's probably the reason why I haven't got it on here. Let me see, we need to have Japan Nikkei index on here, so I've probably got it on the other side. I think that's why I couldn't find it. Oh, I've got it here. Okay, so what we're going to do is we're going to overlay, and we can overlay by JPN. Yes, JPN 225. So JPN 225. Okay. Okay, so what you see here is in this red we have US dollar yen coming down, and we have Japan Nikkei index overlaid, and you can see that generally speaking they both tend to travel together. There are some times when they are a little bit out of sync, but there is a relatively strong correlation between them, and certainly from the low here. So we formed the low, this particular low, not the previous one but this particular low. They both going together and are showing a very similar correlation. So the red and blue is the yen, and this overlaid green and yellow is the JPN, which is the not JPN but the Japan 225. It's the Nikkei index. Okay, so in the Nikkei index you can see we have come down here, A, B and C possibly. So then we had some kind of a correction, and in fact what I'll do is I'll change the yen into a line color. So one in blue is the yen and the other one is the equity index, and in the equity index you can see that here we had possibly 1, 2, 3, 1, 2, 3, 4 and 5. So it's possible that that is a first leg up. Then over here we've got some kind of a sideway correction, or it may be this, like so. So that would mean it is the leading diagonal on the Nikkei index. So you got 1, 2, 3, 4 and 5 gives us wave 1, wave 2, and then we've started a new cycle. So you've got 1, 2, and here 3, 4 and 5. Okay, so whatever, so in other words, if I just put those numbers in, here is possibly 1, this one is 2, this one here is 3, retracement 4, and then wave 5. Okay, so that's wave 5. And then also if you look at it, then between the wave 3 and 4 we have a divergence on the RSI. So I think our labeling is correct, at least for a cycle starting from this low here on the Nikkei index, right? Now in the Japanese yen, we actually didn't bottom until we came to this low here. Okay, so I'll change the color of that one to say blue. Right, so where we have a blue line is where the yen bottomed. During this time the Nikkei index started leading the up move, but the yen didn't actually really start until this year, which is back in September, 13th of September is when it's really started. So if I was to label that together, then you can see that maybe I've got a very small 1, small 2, then from here is a wave 1, wave 1 here, sorry, wave 1 there, and then we had a wave 2, and I'll make them slightly thicker line to contrast it, and then I won't spend the same depth of analysis on the other US dollar pairs. We'll be able to draw some conclusion from this one. Okay, so we've got wave 1 and wave 2, and then starting up from there we've gone up 1, 2, 3, 4 and 5. So I think this one here is a wave 3. In fact, let me make that one look brown color, easier for my eye, and contrast it with the other colors on the chart. Okay, so the yen's gone wave 1, wave 2, and then all of this here is wave 3. It's had a retracement wave 4, which is there, and then this final leg up as wave 5. Okay, now that cycle completes everything from here, from the low we had on 27th of September. Okay, so the very first low we had was on middle of September, which is around 9th, 13th of September. Then we had another low at 27th of September. So I think what we got is we are expecting a retracement of this in the dollar yen. So if I was to put my Fibonacci ratio on, and we are expecting a correction of this move here. Now how much does it correct is difficult to say, but the usual expectation is you expect at least about 38%, and that might bring it into the vicinity of where we had a previous scratch that. This one here. Okay, so this one here, this green and yellow is the Nikkei index. Okay, so this one is Nikkei index, is JPN225, and the blue is the Japanese is the US dollar yen, right? So what I'm saying now is that we've got this 5 wave up, we're expecting a retracement. So retracement can be 38%, in which case US dollar yen can fall to somewhere in the region of 89, but we would at least expect 23% retracement. That would bring the US dollar yen to about 90. So that would suggest that the yen is going to be weak for a while. And how long? Well, from the bottom here, from here we've gone up to the top on a daily chart. It's taken like 110 days. So if it's 110 days and you expect, say, at least 20% or so decline, so maybe that would last us for at least a couple of weeks minimum, maybe 3 weeks. So here I'm expecting now US dollar yen to come down retrace in ABC fashion. So it will come down, in fact make that one red. So it come down A, B and C if it is only coming to 23%, which is around about 90, and then after that we would expect another leg higher. Okay, once we get this correction sorted. If we're coming to 38%, then that same ABC could actually stretch us to lower level. So US dollar yen could drop to somewhere in the region of 88, but at least around about 90. That's what I'm expecting on there. So if I now take you back on the actual yen pairs, this is the yen pair, and in the process this fairly sharp narrow trend channel will be broken to the downside as the yen continues to correct. And over here you can see that this low we had was on 13th of September. Got wave 1, got wave 2, and then looking at these here is I've got 1, 2 in bracket, 3 in bracket, 4 in bracket, and then 5 in bracket. And if you look at the last one, 5 in bracket, you can see it's also like not completely but little bit like an ending diagonal, like so. Okay, it's the ending diagonal. So 1, 2, 3, 4 and 5. So once that's done, we expect now a retracement to the downside, and often the retracement comes back to the wave 4 of the previous degree. That would bring us into somewhere about 88 area. Now that synchronizes with the fact that we're expecting at least 38% retracement. So for example, if I put that fib retracement on here, around there, okay, so we're expecting a drop to either up to ABC into here at a 90, and then go up for the final leg to complete cycle here before we do a lot bigger retracement. And we will review when we get some more price data, but otherwise we're expecting dollar index to fall into that kind of fashion. So it will be at least a few weeks. So I think from that perspective, I don't expect just a small little reaction here. It's taken over 110 days, so expect at least something like 15 to 20 days, so minimum 2 to 3 weeks, and that will have an opportunity to come down, retrace back up, and then another leg down basically. So although I've only put leg down and up, is actually leg down is going to be A, B and C. That's what we're going to see, and in that process it's going to march out some time. Like so. So it's going to take some time, and we'll get ABC decline, whether it comes to 90 or whether it comes to 88. But that's what the dollar yen is saying. So currently we wouldn't go long. It's in a big uptrend move, and therefore we'll be looking to get in long once we get confirmation of our couple of weeks of retracement, and it'll be good retracement. It will allow us to then assess exactly what risk we accept when we establish a long trade, and then that long trade will be relatively short-term trade. It's not one of those big mega trade, because that long trade could actually bring us into the vicinity here around 95 or just marginally higher. That's where I think the wave 5, which we are looking for here. So this wave will be 3, and then we're expecting this current retracement to be 4, wherever that happens to be, whether it comes to 90 or 88, wave 4, and then I'm expecting another leg up which will complete a wave 5. So whatever we enter, if we enter at 90 or we enter at 88, and that's only on the confirmation that we've had an ABC decline over a reasonable number of days. Then we are looking for next target around about 95 or fractionally higher. Okay, and after that we would expect a lot bigger decline, and that would complete the 5 wave up, ABC down, and then we'll be in the next cycle up. So that would be the cycle we really want to enter, where we'll be riding that cycle for several weeks, almost like this one here. This was the strongest wave of all, so we won't have exactly that, but what we will have is we've got, see here, 1 in parenthesis, 2 in parenthesis, and then we have in double parenthesis rather, 1 in double parenthesis, 2 in double parenthesis. This one here will finish up wave 3 in 1, 2, 3, 4 and 5. So we'll finish up with the wave 3 in double parenthesis, we'll get a wave 4 down, and then we'll go for wave 5 in double parenthesis. So at that sort of a time we'll be looking for a swing that will last somewhere in the region of 100 or maybe fractionally higher. And we'll project that once we have a low for wave 4, we'll get a good idea where the wave 5 is likely to go. So we will be looking for that particular trade, but that's going to happen in a secondary reaction. And what I mean by secondary reaction is that currently we're coming down for wave 4, we'll go up to wave 5, so that wave 5 will be the wave 3 in double parenthesis. Wave 3 in double parenthesis, and then we'll be looking for coming down in wave 4 in double parenthesis, and then finally we'll be looking to go up wave 5, something like that. So we'll be looking to take up 2 trades. We'll be looking to take a trade to the upside to about, from wherever it bottoms here, from 88 or 90, we'll be looking to go up to about 95 and look to exit out, then let it correct back down, and that correction will be again somewhere in the region of 87, 88 area, and then we'll re-enter there for this next leg up. And this next one is the one that's going to be fairly big, because it will be equivalent to wave 5 within this section here, double parenthesis. So we'll be looking for double parenthesis wave 5 up there, and in comparison that would be a larger swing than the current ones we are in. Okay, wave 5. So at the moment we don't know where wave 5 is going to be. This dotted line is where previous structure resistance was, but if it does materialize and it drops down to about 88 for example, then we are talking about good about 1000 pip. But if it only drops down to 90 and goes up there, then even then we're talking about good 600-700 pips. So it will be, you know, possible for us to trade that. So that's what I'm expecting on a US dollar yen, and then we'll go through other dollar pairs now. So let's look at the dollar Swissy. The dollar Swissy, and I'm going to stick to my original count I had on here. So we've got 1 and 2, and then parenthesis 1, parenthesis 2, 3, A, B, and C, wave 4, and then this last one coming down, which we've already had, or one more leg down will actually complete this wave 3. It will complete the wave 5, because here we may have 1, 2, 3, 4, and 5 for example. So we may actually finish up with the wave 3 there. Okay, so that wave 3, it will be 1, 2, and then all of this as a part of wave 3, then do a retracement wave 4, and then come down. Okay, so that's what could happen if the wave counts are correct, and so far there's no reason to expect anything different, because this currently seemed to fit in quite nicely. Here we had like A, B, and C wave A, B, and C as a wave B, A, B, and C back up as a wave C. So basically you can see it's like a running flat we had. Okay, and now we are going in with the final leg down to wave 5. So in other words, if in the current cycle, see this one here, that's wave 1. Okay, wave 1, wave 2, wave 3, we've come into wave 4, so all we want now is wave 5 to make a retest of this low or make another minor lower low. So if the US dollar weaken against the yen, against the Swiss, just for that much, then we would complete that leg to the downside, and that would complete the 3 wave. Then we expect a deeper retracement for wave 4. And remember, dollar Swiss is only 10% or so, 10-11% or so of the dollar weighting. And dollar Swiss has been, with the exception of few days, it has been relatively strong, but have a good correlation, negatively speaking, against the dollar. I mean, a good correlation with the dollar, because traveling in the direction of the dollar. So we're expecting a lower low in the dollar Swissy, and then a deeper retracement back up to 92, 93 or so before continuing lower. So in that way, I think the dollar looks like from here could weaken enough for that over the next few days, could weaken enough just to produce that retest of the last low and complete the 5 wave to the downside. So next one we look at is the Aussie dollar with the US Aussie dollar. US Aussie dollar has been a little bit complex. What I'm going to do is this double bracket A, I'm going to put it over here, and I'm going to stick to something where we had a bit more traditional original number. I'm going to now leave it on there. I've played with various counts and it's probably not worked out too because there seemed to be a lot of confusion. Over here, so this is 1, this is 2. Okay, and I'll go back to the normal chart. Okay, so we've got 1 and 2, and then in the next number we've got 1, 2 here in Roman numeral, and the high over here we had is wave 3, and then where I put B here is not a B really, so that one is wave 4, and I'll have to then bring it to the current. Okay, so wave 3, See, what I wanted to do was actually edit this. Sometimes the numbers are so close you can't separate them. Okay, so I'll edit it now. So this one is wave 4, and then this high we had over here is wave 5. So that 5 also completes this wave 3. Okay, so what we're going to have now, okay, you can see here now that we had a wave 1, wave 2, then we've got 1, 2, 3, 4 and 5. So that completed wave 3, so you got 1, 2 and 3, and this is part of wave 4. Okay, so this whole of this is a part of wave 4. Where exactly does it finish is a little bit still uncertain, but if I take you into the daily chart, then what we have is, since the wave, this top was formed, wave 3, then we got A, which is ABC down, ABC back up, and ABC down again, and the RSI momentum is highest over here. So either that's where it finished, and we should really have 5 wave move to the upside, or we are still within that part of the same correction. So we've got wave A, wave B, wave C, this is D, and we are now forming that leg E. Okay, so if we assume that we are still an ongoing connection, then we have this wave A here, and I'm going to actually put that one down as okay, leave it as wave A, wave B here, this one becomes wave C, and then over here is we're looking for wave D, and then finally we are now working on what could be the last retracement, wave E. So we finish up with a triangle. Okay, so it's wave A, B, C, D and E, and this D is a little bit strange in a sense that it's taken a lot longer than the previous one, the very sharper move, but here it's taken a longer. So I think what we've got here is possibly wave A here in single parenthesis, then we got A, B and C coming down, which would complete this wave E. And in terms of exactly where it would finish, so wave E can either finish around here where the horizontally we had a support and become truncated wave E, or this will drop all the way back down to here, which is rising trend line, and also 78.6% retracement of this leg up. Okay, so we will not be looking to get long on Aussie dollar just right here. We need an evidence that is actually turning, because if we are getting if this was A and then we got small a, small b, and we're looking for small c, okay, this one as B, and then this one here becomes C. So we had a wave A here, wave B, and wave C. Okay, so overall that's why we got D over here in double bracket. So if you look at it, underneath we have the C in double bracket, we have D in double bracket, and not over here, and then we are working on a wave E in a double bracket. So previously I was hoping that we would be looking for a bottom in here, but if I look at the RSI, you can see on the daily chart it's the strongest where it is now at the moment. There's no divergence. So what I'm now looking at is, if I drop down to 4 hour, then here we've got what looks like to be in fact a wave 1, or it could be wave 1 or an A. So if I, okay, let me just leave it there as wave A. Wave 1, wave A, wave B, and we are working on a wave C, assuming we're going to finish here. But this could also be a larger degree wave 1, wave 2, and then you got 3, this messy one here. I suspect this will be running flat, so it'll be wave 4, and then coming down for wave 5. So with a wave 1, 2, 3, 4 and 5, but if you look at the RSI, we have a confirmation that there is a possible divergence, but that might actually complete overall wave A, and in which case what we would then expect is a retracement and then another leg lower. So over here we might get 5 wave down to complete a retracement, and then we get a retracement of that decline like here, and then another leg lower. So it may be that we will come all the way toward the bottom when the overall correction is complete, and we would then find that the dollar is in the process of making a new trend to the downside when all the other currencies will begin to revert to the upside. So on this one now, if we get, after completing this move here, so you've got 1, 2, 3, 4 and 5 nearly done. Within the 5 you've got 1, 2, 3, 4 and 5 is done. So we are now currently retracing. So if we put a Fibonacci on that retracement and say for example we do like that, so you get 50% retracement possibly, or a little deeper, 61.8%. so this is what we're looking for. We're looking for ABC up there and then start coming down again. Then we could, if it's possible or if you wish to, we could consider a short trade in that area, but we'll look for confirmation and we want ABC retracement back to 50% retracement ideally. So that will be like 1.04 area or fractionally higher, 1.042. If it's going to be deeper, 61.8%, it can go a lot higher, but otherwise 50% I think is reasonable within the current downtrend, and the fact that the second leg then would be starting off from here to come down. And it's possible we might get a double. In this case we might finish it with just double zigzag, or we might get a triple zigzag. Okay, if and the downside, of course, of that one for shorting would be at least coming back to these lows minimum and maybe a little bit lower, back to over here. So it's possible a short trade. If you were inclined to consider, I would not go long at the moment. I want confirmation of ABC going back up, and then look to short around 1.04 area. Okay, and then we'll be looking to travel to the downside, and we may have other things to help us, like for example, if this one now forms a small retracement and then start making another leg up, we might be able to see where we can put a minor trend line on, like that for example. So we'll have maybe a small channel going up. So on confirmation of that topping out, we could consider shorting if you needed to, and then that would be like an intermediate term swing trade, not a very big one, because once from there we're looking for minimum retest of these lows here, or possibly a little bit lower low. So about 200-300 pip, and if it comes all the way down here, then we're talking about 400 or 500 pip from there. Okay, so it will be almost like equivalent to this one in reverse coming down. So Aussie dollar is quite weak against the dollar and will continue down for a little while yet, allowing for minor retracements. And I think the New Zealand dollar is relatively strong, but it is also in the same kind of situation. That too is currently, for example, going through what looks like to be a triangle, and it's a question of when that triangle finishes. At one point I thought this line where I put in there is completely over. That's where the downward correction is finished and we are in a new uptrend, and if that still holds, then we've got this possibly as a wave 1, although it doesn't look ideal, because what I've done, as you can see, I said small 1, small 2, small 3, small 4 and small 5, all that fits. So if that is 5 wave up, then it gives me wave 1 in a bracket, wave ABC down, wave 2 in a bracket, wave 3 and wave 4 and wave 5. So it become a leading diagonal. Okay, if that is a leading diagonal, then that's wave 1, ABC retracement wave 2, and we've gone up higher, and that part, which basically from here to there, is a little bit difficult to see exactly what it might be. The highest momentum on the RSI is over here. So if this was 1, this is some element of part of wave 3, in which case we may already have one wave to the upside. And on the surface it doesn't look it, but if you drop down to smaller time frame, like say 1 hour chart, say, then you can see the first one is a leading diagonal, 1 2 3 4 and 5 leading diagonal. So wave 1, wave 2, wave 3, wave 4 and wave 5. So it's still possible that we may already have a first wave up on that, and it's not in the triangle, unlike the Aussie dollar. It's not in the triangle. This one is first wave up, wave 2 down, and then in the wave 3 we've got 1 up, and we are in the process of doing a wave 2 down. So this one may actually line up as possible bottom of wave 2 for it to go up. If it fails here, then this was some kind of a complex expanding flat. So in other words, wave 1 here, wave this where I said 2 is not a 2 but it's actually an A, this could be B, and we could get a deeper retracement wave C, like that, and still be part of wave 1, wave 2 before we go to the upside. So the thing about this is we are charting them at the moment. There's not often very clear pattern that we can identify, and we are not interested in trading them intraday, so we don't really care exactly what happens in that area. We are expecting some confirmation. Either we need a confirmation that it bottoms out at 82 level and that then it's beginning to go up, and in which case we'll look to go long. Or if it doesn't, then we're expecting this one to correct overall, and in that case we can expect maybe say something like 50% retracement of wave 1 or the overall move, and we may come down to 50% here, where we could consider bottom to be in. Okay, so it's only a question of where we get long for this one, and same goes with the Aussie dollar, where we got long, because the next leg up, if you did want to trade this to the upside, we do expect this one, if we do this leg up here, AB equals CD, is taking it to about 95 area. So there's a good bit of room to run to the upside. So we are not impatient and we don't want to rush in. We want to see whether the price expectation actually matches with what we are trying to anticipate. And if it does match, then we know where we are looking to go long on this one. Okay, so currently New Zealand dollar is still declining or correcting against this last move up, but it is not correcting to the same extent as the Aussie dollar. So in that case, the Aussie dollar currently is the weakest of the two. And then we've done the yen, so the only thing now remains is the euro, pound and Canada. Okay, so I'll take the Canadian dollar first. So in a Canadian dollar, we had this decline, which I think was clearly in a 5-wave down. So wave A, 1, 2, 3, 4 and 5 to give us a leading diagonal down as wave 1, wave 2, wave 3, 4 and 5. So that's looks like a 5-wave down. We are currently doing ABC, and that ABC is possibly a zigzag, in which case we've got wave A, wave B, and either wave C is done or wave C is still in progress. So when I drop down to 4 hour, we have either wave C done here, or from the bottom this might be wave A, this might be wave B, and we are now looking for wave C. So as we are expecting dollar to be stronger, I suspect that the Canadian dollar will also weaken against the US dollar. And if you look at it in the longer term, so you have this red pitchfork declining, so it's quite possible that the dollar Canada could continue to move up, and actually form a very good hit on the upper parallel of the declining pitchfork, and that would give us an opportunity to short on a longer term basis. And I think that will probably line up once the dollar is finished doing the flat correction we talked about, and quite possibly then everything dollar would gain against the dollar, and dollar would weaken against everything. So we are not doing anything on this Canadian dollar US dollar pair. It's often a difficult pair to trade because it often stagnates a lot and it doesn't have a lot of follow through. But once the momentum starts, like over here, then you can expect a fairly big strong momentum, and then it sort of goes into this kind of mode, hibernation mode. It did the same over here. It dropped very strongly and then spent several days, weeks in that area. So I'm expecting currently to be another leg up, and we may expect dollar Canada probably go to 1.01 area, and at that time it will line up with the declining trend, declining pitchfork, where we would consider going short. And then the longer term target to the downside is fairly big actually. If you look at it, I would be expecting this rising trend line, maybe that rising trend line to come into play, at least retesting this low, maybe taking it out and dropping down to something like 95, and longer term is even lower. But from here we might even get this AB equals CD move that would bring us into this kind of area here. Show you. If you put AB equals CD, you can see it brings us into this kind of area here, around 93 area approximately. So it's a decent one to go into to help us trade with a diversified portfolio, but we are not looking for short until we get to that area, and then we will need a confirmation of dollar weakening almost against everything, because this particular decline won't be just because of the Canadian dollar. The common factor will be the US dollar weakening against everything except yen, and in that case this one will also then begin to play out to the downside. So dollar index has some more further upside based on this chart and on the chart that we looked at on the dollar Swissy, but dollar Swissy is relatively stronger against Canada. So Canada is going straight up, whereas the dollar Swissy needs a little bit of retracement then going up. Okay, so that's the dollar Canada. We look at the dollar pound, and the dollar pound, which is one of our big trade, we're going to line up if it's going to play out as we're expecting. Since the June low, we've gone up in a wave A, B and C up. We've come down in A, B and C back down. It's a fairly deep retracement, and also it looks like we've done what we call an expanded flat, which you know now what expanded flat is from my previous recordings. But in this last leg, expanded flat has ABC, ABC. So you get ABC zigzag down, ABC zigzag back up, and then the 5-wave correction to the downside. Okay, so if the 5-wave correction to the downside, we can see on that daily chart we have a clear divergence now, even higher high on the RSI. I think the bottom is in. I would not be too sure of that, because we might still get a proper divergence, right? So in other words, if the current one is some kind of a complex wave 4, then that wave 4 will finish, we'll get another leg down on the price with the dollar making a move to the upside, and then we will get a proper divergence which will be between wave 3 and wave 4. It won't be just a couple of days. Between wave 3 and wave 4 it will be like over a week, which I think would play out really nicely. So the dollar, I'm still expecting a bit more weakness. If you drop down to 4-hour chart, then I think this mess here is a complex. We've got wave 1 down, 2 up, and then I think this is wave 3, this is wave 4, but see we've got ABC down here. So I think this is an expanded flat, because wave B appear to have gone beyond the origin of A, which is here, and wave C will probably continue until we get to about 158. So I'm expecting a bit more if it's not topped. Otherwise we got a running flat, and if it's running flat, then it's already done wave A up, ABC down wave B, and ABC back up as wave C. Okay, so then we'll have a running flat, and in which case we're going to finish up with the wave A. In fact, it looks more like a running flat to me now that I'm looking at it. And then we are looking for 5 wave down, which will complete this move to the downside. So next week we may actually see pound begin to weaken against the dollar, if not immediately, later on in the week. So what we might have is we might have a small decline and then another little push up, there, and that's where we are likely to finish, move to the downside. So wave B will be there, and we will have bottomed out, and that's the stage we'll be looking to go long on the pound, and some of our other currency pairs will line up at that time. We'll look at that a bit more in detail tomorrow. Then in terms of the euro, on the euro, what I'm going to be doing overall is that I'm reviewing overall exactly where we are in terms of final count, but as you can see from this daily chart here, at the moment we do have divergence between what I think is a wave 3 and what I think is a wave 5. But the wave 5, when you drop down to smaller time frame, we have a little bit more action left on that one. So next week what I'm expecting is that we are probably going to expect a bounce in the euro, and then we will expect another leg down, and I will explain in detail tomorrow using correlation chart, but you've already had one of the correlation chart I produced, and then we are going to get another final test, by which time the euro will have produced its top, and will be looking to then pull down. If we look a quick look at the correlation chart, then the one that I'm looking at is this chart here. This is the blue line is the German DAX, and then the green and yellow is the euro, and it's say hourly chart. So the German DAX here, I think, has done a wave 1, which is a leading diagonal. In fact, I'll make that one a brown color, wave brown color. So the leading diagonal, wave 1, wave 2 over here, wave 2, then this is the wave 3, 4 and a 5. Okay, so this is 3, this is 4, and this is 5. So 5 wave down. So now if the German DAX has done 5 wave down, and it has a fairly good correlation with the euro, there is some time when one lag or the other one leads, but generally there is a reasonable good correlation. So you should get now ABC move to the upside. And if you look at the move so far, it may be that we've got wave 1, wave 2, wave 3, wave 4, and wave 5. So what we would expect is this wave 5 to finish, which will be wave A, wave B, and then wave C, and then if you step back, so that will finish wave A, 5 wave move, ABC back up, wave B, and then another leg down. And so the euro should be doing the same. Euro is looking like currently bottoming out, and that too will do ABC back up and then ABC back down. So at the moment, if you want to do intraday swing trade, you should be looking to go long on the euro, you know, using your money management and everything, and expect a 50% retracement of this decline on the euro, which will give us a wave B, and then we should be looking to short euro back toward the downside, and we will be then coming down to probably somewhere in the region of about this area here, which on the euro you can see is 133 area, or maybe 132.50. So 133 or 133.50, and that will also bring us into a larger term trend line coming into play, which you will see on this chart here. So this is what I'm looking for. So on this broader chart here, so I'm looking for ABC up, then another leg down, and then pushing higher. So if you wanted to go long for an intermediate long trade, then we'll be looking to go long on a euro, probably in the region of 132.50 to 133, 132.50 to 133, and then we have this rising trend line. So we might actually find price come into that location, and that would be after an ABC up and then another leg down of 5 wave, which will probably take about best part of the week, I think, to form. So euro sideways to negative for this week, the dollar sideways to up for the week, and equity index and oil sideways to down for the week. So that's the conclusion. I will post this out in a second, and hopefully you find it in good time for you to plan your trade during the coming week. Thank you.